Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Markets, at least came up above that 19,800 levels, but flip-floppy day of trade.
Absolutely, Vinny. You can actually say it's a range-bound trading session. Third day in a row that we are seeing range-bound trading session coming in for the benchmark indices. No doubt the Nifty is still holding above the 19,800 mark. But yes, a very subdued trading session, lackluster, you could say it actually. Let's take a look at what Nifty Bank is doing, because the picture there was much better than that it was of the benchmark indices. Last time I checked, you have them. You have the Nifty Bank at least firmly in the positive territory. 0.3% uptick coming in for Nifty Bank. Let's take a look at what the broader markets are doing, because today the mid-cap and the small-cap index, both of them are holding on to good gains. Mid-cap index has given up some of those gains. Now it's trading with gains of about 0.1%, but small-cap index continues to be among bucking the trend. 0.8% uptick coming in for the small-cap index. Talking about the advanced decline ratio, as of now, if you look at the advanced decline ratio, it is pretty much neck to neck, but a tad bit tilted towards the gainers. Talking about the sectoral indices, and all the sectors are in the positive territory, barring the IT and the pharma index that are actually in the negative territory, with the pharma index seeing the biggest drop of about 1.3% today. So that's the way how the markets are looking like at this point in time, Vinny. Yes, it's a range-bound trading session when it comes to the benchmark indices. Broader markets holding on to gains.
Okay. Let's keep an eye out on where the market ends in the next couple of hours as well. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. On the technicals today, we're joined by Aditya Agarwala, but from the research team, we're joined by Ankita as well as Ashesha. Very good afternoon to all three of y'all as well. And as always, I'll be starting with the first stock that is in focus. Let's put the spotlight on Sjs Enterprises. Today, the stock is in focus after Ashish Kacholia has actually sold around 3.47 lakh shares in the company at around 627 rupees. This was in a bulk deal yesterday, and overall, when you look at it, as on 30th of September, he held around 10 lakh shares. That was around 3.23% stake. So clearly a reduction that is coming in the stake that he was holding as well. 3.23% stake is what he held in terms of when it was on 23rd of September. Reduction in stake. Now he'll be holding around almost 6 lakh shares in the company. Keeping an eye out on that. Previously also he had sold some stake as well. As of now, the stock is down 2% in trade, recovered from the day's lowest point, but still, after the selling coming in from Ashish Kacholia, Sjs Enterprise down 2%.
All right, there's SGS Enterprises that is sulking in trade today, but there is another one that is sulking today in trade, and that too has fallen the most in over 3 years. And that particular counter that I'm talking about is a Cipla. Cipla has fallen most since November 2020. This is because you had the details that came out from that Pithampur warning letter that the US FDA had issued to the company. So US FDA has highlighted the shortcomings at the plant in Madhya Pradesh in their warning letter. The stock actually fell as much as 7.4% on an intraday basis. The US FDA letter that is dated November 17 said that the inspection of the plant of Pithampur identifies significant violations of the current good manufacturing practices regulations for the finished pharmaceuticals. Also, Cipla has said that they will be responding to the US FDA concerns and ensure sustained compliance when they actually put out a filing on November 19th. But yes, the US FDA warning letter, the fact that they found data integrity doesn't bode well for the company or the stock price. As you can see on your screen, fallen most in over 3 years, and that's Cipla for you.
Let's move on to stock number 3 for today. AU Small Finance Bank, that's the stock that you've picked out for us today. In terms of charts, nothing exciting that has happened in the last 6 months as well. Is it the right time to actually start looking at AU Small Finance Bank, and at 722, is it an attractive buy?
Thanks for the show. Yes, I believe it's a good time to look at AU Finance Bank, and as you rightly pointed out, stock hasn't done much for itself of late. It's on the verge of a breakout from a falling channel, and just ahead of the breakout, stock did witness minor correction. Interesting point to be noted here, Vinny, is that it took support at 38.2% Fibonacci retracement level, and from there, stock has bounced back beautifully in trade. And I believe it's time to look at the stock, because the risk to reward is also in favor of going long at the current levels. I'm looking at a target of 765 to about 780 on the upside in the stock at current levels. definitely it offers a good risk to reward ratio. So on the upside, immediate target could be around 750. If somebody is looking for slightly longer term time horizon, then they can stick on to the stock and look for a target of 780. Along with that, RSI 2 is suggesting that there is enough strength in the stock to go long at current levels.
All right, moving on, Ankita, let's talk about WellSpan Corp and why is this particular stock in the spotlight today?
Yes, WellSpan Corp is in focus today. In fact, it opened more than 0.5% today, but now we're seeing a bit of a selling coming in there, and it is down 1%. But in the morning, it was up more than 0.5%, and it was on the back of the fact that its wholly owned subsidiary Syntex BAPL has got Odisha government's nod for its proposal to invest 479 crores for establishing a manufacturing unit of CPVC, UPVC, SWR, agri pipes, PVC fittings, and plastic tanks. Now, this will have an annual capacity of 37,520 MT in Sabalpur in Odisha, and the project is likely to be implemented over a period of 3 fiscal years. And this can generate an employment of almost 1,000 people and more. On the back of this, WellSpan is going to be in focus today.
Okay, keeping an eye out on WellSpan. But let's talk about the metal packs. And Ashesha, why are all the metal stocks in focus today? What's the news, bro?
Well, yes, all of these metal stocks are in focus on the back of a report that has come in from CLSA. CLSA, in fact, says that the spreads are at historic low levels. They also say that Chinese steel spreads have now corrected to $100 per ton, which is the lowest level that we have seen in the last 15 years. As far as domestic steel market is concerned, they say India's steel demand continues to remain very strong and that Indian steel prices are unlikely to trade at higher premium as compared to current levels. As far as their stock-specific preferences are concerned, CLSA says that they are preferring Tata Steel in the ferrous space and Hindalco in the non-ferrous space, and target prices for Tata Steel and Hindalco and Vedanta continue to remain unchanged. While for JSPL, they've reduced their target price from 720 to 715, marginal reduction in target price. So on account of this report that has come in from CLSA, all of these metal counters are in focus today.
All right, moving on, Aditya, very good afternoon to you, and also let me wish you a happy belated birthday. Hope you had a great one. But let's talk about Bajaj Finance then. And do you think that this one also will have a great ride going ahead, given the fact that you have a lot of news flow not supporting the NBFCs in particular, but Bajaj Finance, do you think it will stand out?
Hi Cheryl, good afternoon and thanks for the birthday wishes. Yes, I did have a good one. Talking of Bajaj Finance, though there's a negative news flow as you mentioned floating around NBFCs, but if you take a look at the way that the stock has reacted to these news flows, it's done nothing on the downside, to be honest. It's just going through a sideways consolidation phase and it's rather approaching neckline of a cup and handle pattern. So it's a bullish pattern on technical parallel. So the neckline is placed at 1660 and I believe very soon you will see stock crossing that neckline of 1660 at current levels of 1630 with a downside at 1580 to about 1530 offers an excellent risk to reward. And I'm looking at a target of 1800 at least on the stock on the upside. Could be slightly positional trade, but I believe once stock breaks out of that hurdle of 1660, it will have a smooth ride all the way towards 1880. So it's not a bad idea to lap it up at current levels. We're just 30 points away from the breakout. Once stock breaks out, I believe it will have a very good move to levels of 1880, 1800 on the upside. And technical indicators are absolutely suggesting that the breakout is on cards, can come anytime soon.
Okay, let's keep an eye out on those levels for Bajaj Finance. But let's move on, talk about Solvay, which one is this is in focus after actually the stock hit an upper circuit today of 5% as well. After the company said that they bagged an order for electric vehicles chargers from the state-run oil marketing player, that is BPCL, and Solvay has bagged this order for 2,649 AC EV chargers from BPCL. So let's keep an eye out on that one. Was seeing some action in trade today, as of now holding on to gains of 3.5%.
All right, moving on then, let's talk about Castol, Aditya, and how is this particular counter looking to you? Do you think that post the consolidation, this particular counter has actually witnessed now it will actually turn around from here on?
Oh yes, it's a very bullish looking chart structure, Cheryl. And as you mentioned, after consolidation, it has broken out on the upside, and then looks like it's headed to levels of at least 150 and 140 on the upside. At current levels, there's definitely this good risk to reward ratio. On the downside, 133 is a very good support area, and plus look at the volume setup. Definitely looks like the stock is suggesting an up move coming in the coming times. Volume has been excellent in the current breakout, and RSI too has taken support at the lower end of the bull zone, and from there it's turned upwards. So all in all, share it looks like a very encouraging one, and one should definitely look at going long with the stop loss at 133 and look for a target of 150 on the upside.
All right, let's put the spotlight then on rate gain travel, because that particular counter is definitely not gaining in trade today. It was actually down as much as 8.6% at one point in time. Now the stock is trading low by approximately 7% or so, and this is the reason being is that we've seen the listing of about 93.3 lakh shares allotted in the QIP placement. There's QIP at around 643 rupees per share. Remember that price was much lower than what the stock is trading at currently. The stock, if you see, at one point in time that fell about 8.6%. That was the most since October 26. It is the worst performer that is coming in on the BSE small cap index, and not just that, it's a snap 2-day gaining streak as well. Let's not forget the fact that rate gain through the course of the last 52 weeks has seen a jump of approximately 133%. So yes, today taking it pretty easy in trade, this after the QIP shares have listed.
Surely keeping an eye on that one. Let's talk about the newly listed company, Honasan Consumers. That one is locked in upper circuit, Ankita, today after its Q2 numbers. What are the numbers looking like?
That's right, Vinny. Just look at the moves coming on Honasa, the newly listed company. It was up 20% and is now locked in the upper circuit right now. And this is coming on the back of the Q2 results. So they posted some strong set of numbers. In fact, they did see their net profit doubling to 30 crore rupees. And Honasa Consumer has also earned very favorable reactions from Jefferies that came out today. And they have put a buy rating on the stock. They have set a price target of 530 rupees on the stock, and they have also upgraded the EPS estimates for Honasa stock by about 5 to 6%. While they feel that Mama's growth has decelerated in the first quarter, they have noted that the robustness of Honasa Consumers financial is likely to remain very, very positive, and the quarter-on-quarter slowdown was primarily due to the enterprise resources planning changeover. But the true price of the company's performance is reflected really in the first half growth of over 35%. Driving this growth are the new brands under Honasa Consumers umbrella, like Dr. Seth, that's recently become the fourth brand to surpass the 150 crore mark in the annual recurring revenues, and Mamaearth, the flagship brand, has notched up double-digit growth in the first half of the year, and on the back of that, we are seeing some stellar gains coming in for Honasa.
All right, so that's Honasa for you. Good earnings and good commentary coming in from brokerages as well. The stock seeing a sharp up move. But on that note, we'll slip into a break on this edition of Market Fatafat. More stocks on the other side. Don't go anywhere. Welcome back. You're watching Market Fatafat right here on ET Now. Let's continue taking you through all the stocks that are buzzing based on news flow and technicals. And Aditya, coming to you, talking about Deepak Nitrite, how is this particular counter looking to you? Because yes, the last 6 months have been pretty choppy for this particular counter, especially even for the specialty chemical space as a whole. Do you think now things will change for the space, especially for Deepak Nitrite?
Sure, I was just coming to that point about specialty chemicals. Actually, if you take a look at the way all these specialty chemical stocks have been performing for last 6 months to about a year, they have underperformed big time. And by underperformance, I mean they've gotten into a consolidation phase. And Deepak Nitrite is also one of them which entered into a consolidation phase. And now it's broken out from an inverted head and shoulders pattern, which is a bullish pattern. And I believe there is decent upside in the stock at current levels. If one actually looks at lapping up, it can easily see levels of 2380 to about 2400 on the upside. And on a higher time frame charts, definitely looks like stock is getting ready for a breakout from a long triangle pattern setup. So all in all, looks very bullish on the charts. Though I'm preempting a breakout on higher time frame charts, But looking at the rest of the pack within the specialty chemical space, I believe Deepak Nitrite should also look at a breakout very soon. And on the downside, 2100 is a good support area. So risk to reward is also in favor of going long. Hence, I like Deepak Nitrite on charts.
Okay, Deepak like Nitrite looking attractive on the charts and could see a breakout. Let's move on. Ashesha, talk about NMDC specifically. Why is this one in focus? A brokerage note on this one as well?
Well, yes, this counter is in focus on the back of a Citi note that has come in. The stock, in fact, is at the highest point of the day as we speak, 1.3% higher. Citi has opened a 90-day positive catalyst with a target price of 190. The stock currently trades at 173 odd levels, indicating a 10% upside from the current market price. They say iron ore prices have the headroom to rise by another 1,000 rupees per ton, and that market expectations are not as optimistic with respect to rise in iron ore prices. They say that the stock trades at about 3.5 times FY25 EV to EBITDA as compared to global peers' valuation of about 4.5 to 6 times. So valuation comfort is what they are seeing. They've opened a positive catalyst with a target price of 190. The stock, of course, declined in early morning trade, but then since then it has only marched one way, and that is upwards. The stock, as we speak, is up nearly 1.5%.
All right, NMDC in focus on back of that Citi note.
But let's keep it going then with the stocks that are in focus. And on the technicals, Aditya have picked out Jubilant Foodworks for us. When you look at it in terms of the last 6 months, managed to see at least a 14% return. And before that underperformance that we saw in the last couple of years. So finally, charts are slowly moving upwards. But is that here to stay or maybe a correction in the pipeline now?
Vinny, I believe stock will see a breakout on the upside, and charts definitely suggest that the upside will be much higher than 14% that the stock has posted recently. It has actually broken out from a consolidation phase, and it's getting up for a further bigger breakout above 560 levels. Once it starts to trade beyond 560 levels, I believe stock can easily test levels of 590, 600 as well on the upside. On the downside, stock has decent support around 500 odd levels, and RSI is, if you take a look at on the higher time frame charts, has been inching higher slowly. Plus volumes are also encouraging in the recent bullish candles. So all in all, looks like a very strong chart. Though we have not seen that kind of a price action. Soon, I believe you will see that kind of a price action as well. Falling for Jubilant Foodworks. So yes, at current levels, it's a buy for a target of 590, 600 with a stop loss at 500 on the downside.
590, 600 is the level to watch out for Jubilant Foodworks. But let's move on, talk about Eid Parry. This one is in focus on a back of a bulk deal. We saw that Bajaj Enterprises, which is a promoter group, actually sold 40,30,000 shares yesterday in a bulk deal. It was at around the price of 472 rupees per share. This is the promoter entity of the company, and they divested their full 2.27% stake. And obviously, yes, this transaction is something to watch out for because they have Bajaj Enterprises now doesn't hold stake. But yes, promoter group company surely continues to hold around 43% stake in the company. So on the back of that, we're keeping an eye on Eid Parry. Obviously, all these stocks were in focus and buzzing in trade today because it's a Murugappa group company as well with CG Power's news flow. All these stocks were something that was in focus as well.
All right, moving on, Aditya, let's talk about Nasdaq and how is this one looking to you on the charts, a part of the IT pack, but do you think this will be a standout candidate? 21%, not disappointing.
Yes, Cheryl. In fact, if you take a look at the stock, it is broken out from a rounding bottom pattern. So that clearly suggests that for a very good long period of time, stock didn't do much for itself. Now it has slowly started to outperform. If it sustains beyond 2470, 2500 on the upside, easily can stock test levels of 2800 also on the upside. So there is a 200, 250 point up move on the stock, which is around 10-15% also on the upside. So on the downside, immediate support is at 2300 plus RSI, as I closely monitor, has taken support at 50 levels, and from there stock it has inched higher. So looks like a very strong looking chart, and above 2470, 2500 can easily test levels of 2750 to 2800.
Okay, on that note, let's just slip into a very short break. Viewers, don't go anywhere. We'll be back with more after this break.